Welcome back, and joining us on the show now is Dhruv Goel of BigMint. Dhruv, hi, thank you for joining us. And the focus point clearly has been ferrous metals, where we have seen sharp declines in last week or 10 days. It's near 4-month lows that we've seen iron ore and the steel prices trading at. Clearly, whatever China has done hasn't been enough for the markets to change the sentiment. I want to understand about the prices first of all, and what's your sense on the global issues?
Thank you, Manisha, for inviting me for this show. To answer your first question, yes, prices have declined in last few weeks and months, and there are multiple reasons. First of all, the domestic demand was not very supportive, especially pre-election. Government focus diverts into social welfare activities. So what we understand from the market that the fund allocation for infra projects was little low compared to what it was in previous quarters. And secondly, the global markets are still not very positive or not very bullish, despite several incentives or several incentives being given by the Chinese, stimulus being given by the Chinese government. So overall, if you take our sense, we think that the sentiment remains still bearish and probably will continue for next few months.
Dhruv, I was reading your report. So what's your sense on the Indian production and Indian exports? So while the production numbers seem good, the exports do not.
So what we have seen in the market, that there is some kind of production cut happening in the longs product, which contributes around 45-50% of the total output. So we have seen some production cut happening in this segment, both from the smaller players and the larger players. Flat, we have not seen many production cut, but yeah, as you rightly mentioned, that the exports are, there, because if you see the Indian exports, most of exports are happening to Europe, which is very quota-oriented exports. In certain quarter you can export a specific quantity. Anything above that will attract duty on those imports. So what we understand that Indian mills have almost exhausted their quarterly quota, and probably one month or maybe 2 months, the export volumes will probably come down from India.
When you look at the Chinese inventories, they're at a 10-month highs. We've seen prices for iron ore decline by 6% in the previous week itself. So when it comes to iron ore, how would you look at the Indian markets in that light?
So, Manisha, the Indian iron ore and the global iron ore, although since India does not import that much of iron ore, and the iron ore exports, whatever India exports to iron ore is of low grade. So there is not very high correlation with the global market, although there are indirect correlation with the global market. But yeah, in context to Indian iron ore, we understand that this financial year, the supplies and demand are very neck to neck. Reason being that exports were very high in this financial year because the global prices were very high. So yeah, this year, maybe for example, if the total demand was say around 235 million ton in FY24, and production is expected to be around 280 million ton, and exports, including of pellets, would be around 50 odd million ton, and imports would be of 5 million ton. So it is very neck to neck situation, and we expect that prices in the Indian market will probably remain firm. But in April, what happens that these mining ECs are applicable for 1 year. So most of these miners have already exhausted their ECs, and these ECs will be reapplied from April onwards. So maybe on April onwards, we can expect some additional supplies coming in the market.
While the FY24 numbers more or less are out, and you put those projections as well, but the street does believe that it is going to be the second half of this calendar year that you could be looking at things improving in some sense, interest rate cuts and their impact also would start showing. How are you looking at 2024 as a calendar year, and especially the second half?
Overall, 2024, if you compare it with 2022 or 2023, 24 will be a little challenging for Indian steel industry, but second half would be relatively better than the first half, because first half, because of election and a lot of time or a lot of things will, being spent in the election period. But second half obviously looks better, especially after monsoons.
Fair point that. And that's exactly where the hopes are hinging in at as well. Thank you so much, Dhruv, for joining us and putting in sense the iron ore and the steel industry in the Indian markets. With that, it's a wrap on this show. But after the break, we get you business lunch for all the action forward.